So the basic idea is that, this sort of call is to help people break into Web3 VC.
Yep.
The audience on the call constitutes of people who do research or work in Web3, but different parts like, let's say, community building or on the product side. And they want to understand how a Web3 VC sort of things operates. And we've got some founders on the call as well, who sort of want to understand what Pantera looks in, in founders. And then the call structure itself is basically the first 45 minutes, we'll have a one-on-one discussion. The questions would be some that we have found, basis your previous work, your journey into Web3, Pantera and its thesis. And the last 15 minutes would basically be an AMA where people on the call can ask you a question. And yeah, that's basically it. Post the call, we'll sort of publish it on YouTube and do a small thread around it. Right. Chia, great to have you here. Can you start off by giving us a small introduction about what you do and what's your journey been in Web3 till now?
Yeah, sounds great. Hey everyone, good to be here. My name's Chia. Been in Web3 since 2017 on the personal level, and been investing in crypto through VC funds since 2019. I've been an investor at Pantera since for slightly over a year now. Been investing at Pantera as a principal, focused on DeFi, Infra 2.5, Web 2.5, as well as a little bit of consumer. And so have been, very interested in the wide gamut of things. My background has been a little bit all over the place, but started out with an undergrad from Cambridge, where I studied law, went to build e-commerce companies after that, and spent the next 4 years as a fintech / journalist / crypto VC, and dropped off Harvard Business School to join the investment team at Pantera.
It's funny that you mentioned that, and I think one of your first blog posts in your Substack was around dropping out of Harvard and joining Pantera during the crypto bear market. A question that one of my teammates also asked at that point in time is Asian parents being a stickler for education. Did you face some sort of resistance from your parents when you sort of informed them about this decision that you sort of be leaving a chance to get into one of the best business schools in the world and sort of joining Pantera in crypto? That's as such a very difficult context, for a topic for people to grasp.
Yeah. Obviously, that was a difficult conversation, but I think at the end of the day, I have the privilege of having a bit of leeway, and I think it was also something that I thought was an exciting opportunity to be able to do it. I think it's not that many times where I think there's opportunities in the market to seize, and I think this is definitely kind of one of them. And so I've been pretty excited about all of that. It's obviously risky in some ways, but to be completely honest, it's also kind of cool to just say you dropped out, and so that's definitely part of it.
Definitely. And now coming to Pantera, can you sort of give us a brief idea about Pantera and your thesis towards crypto and how you approach crypto as an industry altogether?
Sure. I think obviously we're really excited about all kinds of different spaces in crypto. As mentioned, I focus a lot on the DeFi Infra 2.5 side of things, as well as a little bit on the consumer side. And we've been really excited by a lot of the opportunities that have opened up in the market, especially as post FTX, a lot of incumbents have really suffered huge hits as a result. And so we've spent a lot of time looking at the entire landscape of incumbents, trying to understand if there are any incumbents that have been, very much weakened by recent market movements, and being able to back good founders looking to disrupt such incumbents. And so, one of the largest spaces that we've been excited about has been the stablecoin space. I used to be a fintech investor, and so stablecoins are, I think, one of the greatest things that could exist, contributing to the financial system. And so, spaces like that where folks are willing to tackle large incumbents with a very clearly sought out thesis is something that we've been quite excited to do.
Right. And it's funny that you mentioned stable coins because, when I was breaking into the Web3 industry, the first of, the thoughts that came to my mind was that wasn't this whole movement supposed to be a movement away from, your general sort of nations and currencies and control what sort of a central bank has over, what dictates our life. And you come into Web3 and it's the same thing you see over here. And on top of that, that's the first part of my question. Like, sort of, does this make sense of us having such a huge dependence on stable coins? And the second part of my question would be: is this a new frontier for, let's say, dollarization? So we have seen cases where stable coins are now being used in countries where there's hyperinflation in their own currency, and they are now dependent on stable coins like, let's say, Tether or Tron USD for that matter. And what are your thoughts on that?
I mean, obviously that's a good proof point for product market fit for stablecoins in general. The fact that there are certain economies where a whole range of people are finding great use for it. So obviously, that's a good thing. Giving people more freedom of choice as to their financial system is exactly what crypto is supposed to do. So pretty excited about that. And crypto again is a piece of technology, right? And there are a lot of benefits from implementing technology, including using it to create completely censorship resistant ecosystems, using it to supplement existing financial rails. Like there are always going to be different actors coming in at it and using it for their own purposes. And at the end of the day, like I'm just concerned about how much value is really being created and how much value people really get from these systems, no matter how it's constructed.
Makes a lot of sense. And you mentioned sort of one more article that I really liked was when you compared blockchain with UPI. And me being an Indian, UPI is sort of one of the key, I'll say, contributions that has sort of happened in the recent past to the bank stack of Indian economy. And you sort of draw some parallels of comparing blockchain with UPI. And I really like the point where you compare UPI to wallets, where you can easily change the front end, just like how with wallets you can take your keys from, let's say, MetaMask to Argent or let's say Binance Wallet, and then sort of change your front end. But at the end of the day, you sort of have the same bank account that's linked. But what are some sort of learnings that, let's say, maybe UPI can take from blockchain? So for people here, let me set some context. Think of UPI as a government and a bunch of banks created P2P payment system. And it's much more, to be honest, but think of it like maybe Zelle or Venmo, but it's something that the government has created and all the banks are part of it.
That's an interesting question. I think, the opportunity for self-custody is obviously one that UPI doesn't necessarily allow, obviously, because they were solving for different things. And so that would be a really interesting one. And there are obviously policy challenges with self-custody. But I think that's certainly very interesting. And I think, the range of, the ability to be far more composable in crypto, the ability to make use of smart contracts, I think all of that programmability doesn't exist to the same extent on UPI, although obviously UPI is very far advanced, but there's still a whole bunch of things that are not yet possible, right? And
Right.
I think we obviously see, I still keep track of to a small extent what happens in UPI in India. There's always constant upgrades to it. It is kind of way more centralized. But I think there are some lessons that can be learned in terms of making it a little bit more composable, making it a little bit more decentralized. I think these are some of the things that at a high level I think crypto offers that might not be as present in UPI.
the first thing that sort of hits my mind would be that in a blockchain, if you want to do a transaction, you pay for it, which sort of is missing in UPI, which is basically the government takes the cost up by saying, hey, we are promoting payments, so you don't need to pay. But at the end of the day, it's coming at the cost of those who are unbanked and those who are within the banking ecosystem but don't sort of have the technological know-how to operate these sort of technologies. Let's just put it that. That's, I think, one of the most key sort of learnings that I think maybe UPI can take from blockchain, because at the end of the day, it just costs around 2 rupees, which is like, if you divide it by 80, that's where the dollar value amount is to make a transaction on UPI, which makes it one of the cheapest blockchains out there. And essentially, it's a blockchain in itself, right? So it's basically bank servers validating that, hey, we have the balance that's required to make this transaction. But yeah, that's one of the things that came to my mind when I was sort of comparing and contrasting a blockchain against UPI. But yeah, definitely composability and a lot more sort of custody related initiatives are definitely required. And coming back to Pantera, can you sort of take us through the process of how an investment works, right from sourcing to deployment, and what are the steps that are involved at each level, and how do you sort of go about them?
Sure. So it's fairly standard, a deal is sourced. It goes through multiple conversations with the team. We have an IC that's held once every week. And anyone with the partners um, can have backing, can bring a deal to IC. We run a consensus voting system. And so once we have a agreement with the IC of above a certain score, we're able to kind of then invest into companies accordingly. And so that's really the process. There's normally quite a few conversations that happen between sourcing and investing, depending on the level of the deal, complexity, et cetera, et cetera.
Right. And what do you look for in a founder at an early stage startup? So do you guys have an archetypical founder that you look for when you sort of looking at early stage startups?
Not particularly. I guess what I would say is, ideally domain expertise, strong intellectual curiosity, a history of being able to get things done. And obviously, for me personally, a good understanding of the historical context of the problem that they're trying to solve. This is, of course, on top of a whole bunch of different things like founder market fit, et cetera, et cetera.
So the last word that you mentioned was founder market fit, and I was just scrolling through your Twitter timeline today to come up with some discussion topics. And one of the tweets that you retweeted was basically about Phil Knight from Nike selling encyclopedias before sort of pivoting and doing shoes with Nike. And you asked this question, that what was Phil Knight's right to win? And that sort of creates a very good conversation point, because crypto being so new, we don't have the basically the correct context as to what constitutes a very good founder and what's their right to win. What's your take on that?
I would say, well, first I push back on the premise. I think, crypto has been around for long enough. And there are certainly many people with a lot of experience in crypto. And so do have necessary domain expertise, but I do think point is taken. I think it's a good catch, actually. I think what I'd say is this: the very smartest people, I think, are likely to succeed, no matter what their background and experience are. And especially if you're younger, it's hard to tell if you're going to be like one of these really smart people, and certainly someone is going to be. And I think the issue obviously is that in VC, there's a lot of pattern matching that goes on, and so it's necessary to be able to construct the story of what you're right to win. And so unfortunately, sometimes, if you don't have the right background, it's harder for VCs to understand or be persuaded that you have a right to win there. So I think that's point taken, and that's a big uphill struggle for both VCs and the industry, and for obviously the founders who are going through that process. I think, what I'd like to say is being able to come extremely well prepared with a good understanding of the industry, good understanding of kind of why you're taking specific approaches, being able to have a good articulation of just raw execution and intellectual horsepower. I think things like that helps to, overcome any gaps around, what's the right to win there, if that makes sense.
How would you say that if, let's say, a founder is not adapted at one of these things that you mentioned here, but they sort of back it up with perseverance, so they keep hitting the nail in its head, trying to find or trying to compensate for one of the shortcomings in terms of, let's say, understanding or intellectual horsepower. Would that sort of make sense in a way that you don't have, let's say, one of the required metrics, but you back it up with perseverance and keep coming back again and again and trying to solve the problem?
Yeah, I mean, I think that's definitely part of it, right? And then decided, what, I'm just going to build this company anyway. And there are plenty of great success stories in India for, Zero Dats, the obvious one, where they never took investor money and extremely successful. And look, I think these are great stories, right? I think from a personal career perspective, if you're a founder, like, it's a tough funding market. Not being able to raise VC does not mean you're going to be unsuccessful. I think that's all things to consider. The piece I would say is, by and large, the crypto market is really tough. And it is relatively true that the same few ideas pop up again and again. And so as a VC, one of the things that we do see is, the same models popping up across different countries, and we see why those companies fail. And so, sometimes, the model is just not great, right? And being able to kind of internalize that argument and, have genuine intellectual kind of honesty with yourself about whether or not this might be a good business model or not. I think stuff like that is important. But yeah, by and large, I think, to your point, yes, like resilience, just going ahead anyway, but being smart about it. I think these are things that people do respect.
And you mentioned, things about seeing the same sort of models pop up again and again. How do you rather, or Pantera as a whole entity, sort of navigates around narratives? Because what sort of happens is we see the same deck again and again, but this time it's sort of flavored with what's sort of hot currently. So if there's something related to AI, a founder would pivot and include portions of AI in their deck and how they use machine learning or AI, and or rather ZK or something else into their product in order to find the fund and product, or rather fund and founder fit. How do you sort of navigate through these narrative bubbles?
That's a question for VCs. I think, narrative bubbles come up because, people in the market start to recognize the same few opportunities that might come up in roughly the same time, and then word spreads, and then that might create an opportunity for investments into a particular business model at a particular time. And sometimes it works, right? Like obviously now with AI, in the AI space, but if you think back to the Apple, right? Lots of people decided they wanted to invest into app stores. Apps, right? Mobile apps back in the day. And it was obvious that mobile apps were going to be big, and obviously there were many big companies that were mobile apps. And so these bubbles are useful and interesting, and it's just part of being the scene. I think it's part of the job of a VC to be able to quickly react to these narratives and form your view. And it's also part of the job of the VC to be able to form your view very quickly and understand if some bubbles make sense, and whether or not some bubbles don't, right? And there are plenty of plenty of difficulty with trying to predict the future there and trying to get up to speed quickly, but that's, I think, definitely part of the job. One of the we can see this in, AI for now, the intersection between Web3 and AI. Lots of people have hopped onto that train, and some people have taken a more skeptical view. And, time will tell who is right? But
Right.
job of the VC to be able to form an opinion on that quickly.
Definitely. And you mentioned investing in apps, and there's one more article that you write around Fat Protocol and how sort of you're seeing cracks. I think that article was a year old, March of 22, when you sort of wrote that it will become difficult. And I agree to a certain point that at the end of the day, the consumer won't care as to which protocol the app is sort of hosted on. At the end of the day, what they'll want is the cheapest transaction and the fastest transaction. So apps will sort of take over the whole narrative of the value capture happening at protocol level. But do you still feel a year on out that the investment cycle that happened in the last 1 year, where dApps sort of received a good chunk of investment and had a year's time, even though it was bear market, to find some sort of product market fit? Still, in the previous year, the returns that we have seen where protocols have sort of outstripped dApps when it comes to providing returns. So, do you still feel that that theory, and to which I subscribe as well, that at the end of the day, value capture will always happen at a consumer front, so where the applications are based rather than the protocol level? But does it still hold true, or will it continue to hold true in the future?
Yeah, I mean, I do subscribe on that, but I think it's a process. I think it'll take some time for that thinking to trickle down into the market. And I think the thing about narratives is that it's self-sustaining. So as long as everyone believes the L1s are more important, everyone will put more money into L1s, which will, make the valuation rise, and so there's a vicious cycle there, which is narrative driven. And then, occasionally fundamentals kind of depress that over time. So I think it's more of a process. I mean, I think both from a fundamentals perspective, I do believe that, L1 value capture is going down over time. And it's worth, looking more and more closely at dApps. And also on the philosophical view, I think you've seen, everyone sees it on Twitter, but there's a lot of complaining in general because people want to see more use cases in crypto, myself included, and want to see more killer apps rather than infra plays. And to an extent, I definitely kind of sympathize with that view. And so do strongly believe that, yeah, like we really should be building apps, right?
Right.
It's obviously harder, but I think, that's obviously where the value lies.
In portion, we can substantiate that a lot of the L2s now are sort of, or rather even L1s are now sort of trying to shift towards becoming an L2 that's based out of or based on top of Ethereum, Celo being one of them. And some interesting news around Gitcoin doing something like a public goods network, where sort of the sequencer fee goes towards funding of public good projects, sort of being a certain example of how the whole infrastructure where L1, L2 is being an attractive investment opportunity, becoming less and less sort of the case in practicality. So, having said that, where do you see Ethereum, and what sort of role do you see it play in the coming years?
What do you mean by what sort of role?
What personally I've been seeing is Ethereum becoming more and more of a security layer, and sort of outsourcing the scalability part of a blockchain to L2s and saying, hey, bring your sort of take on how scalability shall be achieved. Either it's a ZK or a roll up or things like that. But basically, what I'm seeing more and more, and this sort of is being doubled down every single day, is that more and more, let's say, L2s are being built, and those are doing the scalability part, and the Ethereum sort of stack is now being seen as a security component, where sort of that's the basic idea of what I'm personally seeing happening in the Ethereum ecosystem. But want to know if that's true, or what's your take on that?
Yeah, I mean, I think it's true. I don't think it's new. I mean, Vitalik has publicly talked about this point many times, which is that like Ethereum should be the smart contract, and smart contract and security foundation, and Ethereum really scales through L2s. And I think he's said this, I think all the way back in 2018, 2017, I believe. So it's not necessarily a new concept. And I think very much part of how Vitalik sees the role of Ethereum. So yeah, and I think, the good thing has been, we've seen good progress on our ones, and so interesting to see what goes on there. But as of now, most of the activity has really centered around L2s. We've made a number of investments there, including in Arbitrum, and so I think we'll continue to see more progress, I think, and just general adoption of L2s from that basis.
And we have an interesting question from Abdul here. He's basically asking, how can a startup seek liquidity if VCs are conservative on capital?
By and large, I guess the question is, what do you need capital for, right? I know, obviously crypto is very famous for very large, massive rounds. And, that capital is needed for certain things, like obviously smart contract audits and stuff like that. But, Uniswap, again, famously written, well, what is it, 50 lines of code, and raised like a grant before launching. And so, I think if you come in with a new innovative idea that people want to use, do you really need that much capital? Is definitely one question to ask yourself, right? There's plenty of great projects that never meant to do it. And also, like, I think famously people are talking about like how OpenSea, survived the bear market, and raised one round, and there was 3 years between each round. I think really normalizing the fact that what we've seen in the past few years is not normal, right? Like that's a really insane pace of capital deployment that you shouldn't regard as the norm.
Currently, can you sort of explain us what are you looking in the DeFi sector as a whole? What sort of occupies your mind nowadays?
Yeah, quite a lot. Nothing specifically, but in general, always really interested in the intersection between TradFi and DeFi, especially these days, since we spend a long time in like the Web 2.5 space. I obviously come from a traditional fintech background, so stablecoins, remittance, payments, and kind of more interesting ways to offer on-chain products in a more capital efficient manner are things that I'm generally interested in.
Can you explain to us, like, your thesis in investing into M0 for that matter? I think it was a very recent investment that captured a lot of attention. Of course, one of the founders being sort of part of DAI and Maker. So can you explain to us, like, what was the thesis behind investing in M0, and what do you see, or what does M0 aim to achieve?
Approaching things in a very unique way, but I think they're creating really institutional. They're looking to create kind of both the regulatory and risk frameworks for a stronger kind of institutionally ready stablecoin that is more decentralized. And so really looking at some of the weaknesses in current stablecoin models, which obviously have done well and have product market fit, and really improving on top of that. And so really strong team from both, crypto native as well as traditional backgrounds. And so really, really excited about what they're doing. And have a strong belief in the fact that current stablecoin models can be dramatically improved. And I think they'll be going out into the market and proving that thesis.
I see a common pattern emerging, at a personal level as to how sort of people break into Web3 VC. We had Smack last time around from Compound VC, and he sort of said that a lot of people in 2017 or 2018 got into Web3 VC by writing about their thoughts of how they see the industry shaping up. Do you think that as a newcomer, writing your thoughts down and sort of explaining how you view this ecosystem as a whole is helpful into breaking into Web3 VC?
Yeah, I think, crypto is one of those things which sometimes hard to prove what you do know, and how how legitimate one is. There's a lot of noise in crypto, and so being able to write, articulate your thoughts, especially one in a easily understood manner, is always very helpful, because it can, if you're looking for a job, it's proof that you know a certain space, right? You don't have to try to justify, do you know X, do you know crypto, like how crypto native you are. You can really just pull up articles and say, hey, this is how much or how deep I know about crypto. It's a great way for VCs to find you, as an example of researching into a space. So it's a great way to get a job. And even if you're a founder, it's a great way to show thought leadership in the space, and to get yourself recognized. In fact, one of the founders of M0, like I actually knew him from his writing, and that's kind of how I started that relationship with that founder.
It's interesting, and sort of how a relationship over what you've written culminates into an investment. But definitely that's helpful. One more question sort of I had is, how do you look at self-sovereign identities, and what do you think about the adoption of self-sovereign identities?
The big challenge is always execution, right? Like the whole point of the identity layer is that there's enough of because it's composable, there's enough data points about a particular um, um, person or identity that's all aggregated into a single place. And so it's almost like liquidity. Like, think of it like an exchange. An exchange is only useful if there's sufficient liquidity.
Mm-hmm.
And that's the function of execution. Similarly with identity, you need a concentration of things to be identified with. Um, you know, and so you need to build that concentration, which is really hard to do, and people are still trying to do it. So jury's still out, but you do see kind of some interesting ways, and the market's not yet one.
And I think this past week, WorldCoin has sort of acquired a lot of our mind space in terms of their launch. What are your thoughts on WorldCoin and their approach towards sort of creating identities?
I think it's interesting. I think if I'm not wrong, but I've not really spent too much time on WorldCoin. I think two of their larger markets are like in India and China, if I'm not wrong. Or one other Asian country, might not be China.
Indonesia, I think, is one of the most biggest. But yeah, India as well is one of those.
So I mean, I think it's interesting that WorldCoin's targeting India when Aadhaar exists. So yeah, I just think of that's interesting. But yeah, I have not personally spent too much time on WorldCoin.
Vivek here asked a question about what are your views on cross-chain or roller bridge security and USBs?
I've got lots of thoughts on that. So depending on the structure of the question, those are a whole bunch of really different things. But I've written multiple articles on the cross-chain space. I think USBs refers to unified stablecoin bridges. I wrote an article specifically on USBs. So yeah, definitely really excited about USBs. I think USBs are going to the future of cross-chain, and so jury's still out on that. But we're seeing some good progress there, and part of the reason why I'm generally excited about like stable coins who can execute very well across DeFi, of which Circle of course is doing some good job there already, but there still remains a pretty big opportunity in that space.
And what are your thoughts on regulation and what sort of approach US is taking towards digital assets and cryptocurrencies?
I think there's obviously a lot of noise that's going on. There, I think every day we get closer and closer to regulatory certainty, and it's not going to happen overnight. It's still there's obviously some positive news here and there, such as like the Ripple ruling, and you hear noises on the legislative front in the US government. But I think it's going to take a while. But in general, I think it's positive. A lot of large financial institutions obviously offering products, filing for ETFs is proof that they're getting very comfortable with the general crypto framework. And for me, it's just a matter of time before we we'll continue to see more and more clear regulation of what's possible, and adoption by incumbents of what we have been doing for a while.
And one of the reasons for asking this question was I was reading through some of Pantera's notes, and there was a mention about sort of recommending founders to incorporate outside of US, achieve decentralization, and then sort of aim to list themselves on exchanges that sort of cater to the US market. And how that sort of view comes about, how do you think, like, is it really possible to achieve decentralization in a current, what we have sort of seen throughout our time here in Web3? That is there a possibility where you can achieve decentralization apart from, let's say, Ethereum or Bitcoin? But yeah, your thoughts on that would be really great.
Yeah, I mean, I don't believe that point was necessarily ruled on specifically in the Ripple case, but my personal belief is that it must have played some role. I'm guessing it must have played some role in the way people were approaching Ripple. Obviously, because it's been a while and it's been, it has had, taken significant steps towards decentralization. And so I think, there's obviously a world where that's possible. I think people's adoption of Ethereum as an example shows that there's a pathway to possibility there. So obviously, while regulations are unclear in general, and no one really knows what the state of the law is, I think there's a lot of positive signals about, certain ecosystems are becoming decentralized enough to fall within the remit of, something that would not attract as much regulatory scrutiny as opposed to a random token just launched.
And coming back to a more question that's sort of related to at a personal level, how did you decide to get into VC and not become a founder? Yeah, can you shed some light on that? Like, why did you go down the VC route rather than an operator route?
Fundamentally, have ADHD and the ability to switch and learn from different founders and different industries, different business models really quickly was something that I thought attracted me a lot. Was also really attracted by the ability to learn from all these great founders really early in my career. And so I think it's been a really exciting journey there. And so yeah, really appreciate the opportunity really to work with great founders and many great founders at once. And so I think that's part of the upsides of VC career.
Right. And if anybody sort of has a question, please feel free to drop it down in the chat box. But yeah, in the meanwhile, continuing on that, do you see yourself being a founder in the future, or would you like to continue with the same investing route?
Life is short, and so I think always be mindful of kind of opportunities to build. I'm someone who appreciates the joy and beauty and also difficulties of founding something. So who knows? But yeah, I think the joke is always that founders want to be VCs, VCs want to be founders, and the grass is always green on the other side.
And having said that, now that you have been on the dark side, if you go back again on the operator side of things, what learnings would you take there, and how would it shape your approach to being a founder?
Being aware of what VCs are looking out for, being aware of kind of how VCs think, some of the challenges of building a VC-backed company, as well as some of the opportunities for doing so, and what goes into that journey of founding a company, finding a co-founder, stuff like that. I think that's where being an early stage founder, early stage VC kind of gives some insight to. And so I think all of that, but I think an appreciation of how to navigate the fundraising space is certainly part of it.
And we have a question from Max here as to what's your take on the talent or identity related startups? I think Max is a founder of a startup called as Entropia that sort of tries to create a decentralized talent network where you can sort of get someone hired in a decentralized manner. and they are building a Web3 native professional network. So what's your take on Web3 sort of playing its role in hiring process?
You're building a product that serves a specific need, right? And then the fact that it's decentralized is helpful. Sometimes it's a short-term value proposition, but by and large, it's a longer-term value proposition, right? And so I think very traditional understanding of your value proposition is really important, right? There's a big difference from going out in the market and saying I'm going to disrupt LinkedIn, right? Which is obviously a very tough thing to do, versus I'm going to the market. I found a very interesting niche that LinkedIn doesn't serve really well. I'm going to disrupt that and expand over time. And by the way, we are also kind of decentralized, and that's going to be really, really helpful. So I think that's one part of it, right? Like as an example, like I think LinkedIn for Doctors there's a company that does that. Clearly identify the pain points that doctors faced when using something like LinkedIn, and was kind of hyper specific with their value proposition. And they've been a very successful company. I think you need to take the same approach, right? Like I think a lot of founders take it for granted that because it's Web3, people will want to adopt it immediately, and by and large that's not true.
Right.
And so I think very, very kind of clear and specific value proposition and discovery.
And what sort of we have seen is a lot of people trying to create these Web2 killers, sort of putting a Web3 lens on a already existing large network of, let's say, something like Facebook or Twitter. How do you see those shaping up? Like, do you feel that those networks with their social graphs and their stickiness would or what is that inflection point that leads to mass adoption of social or identity related startups in Web3? Like, what's that inflection point that causes this great mass migration from a Web2 incumbent, like let's say Facebook or Twitter, to something like Lens or Lenster or BitCloud, for that example?
I really think there's an inflection point, right? Like it's just a slow, steady grind. Um, um, and that's kind of how it works, right? Um, Facebook, MySpace, Friendster was around for a while. Facebook came along. There was a period of 2-3 years where they were neck and neck, and then kind of Facebook took off because they had a clearly superior product, right? I think anyone who was playing around at the time, myself, being one of them, you kind of see that the product was just better over time, and so more and more people switch. So I think it does go back to like, are you building a better product? Like fundamentally, regardless of the tech, that's what people care about, right? Like they don't really care about the back end. And it was still a grind, right? Like MySpace, Friendster still kind of survive in some capacity for the next decade, and people still use them. Same again with like things like Twitter, right? Like I don't know if people are a fan of what's going on Twitter. Some people are, some people aren't. But Twitter it's still around, right? Even if alternatives have grown despite so much change. And so I think being cognizant of that fact, that's really a long slog. Focus on the fact that you're building a better product. I think that's really what the journey looks like.
And what are your thoughts on what's happening at Twitter recently?
Honestly, I'm not too bothered. I still like Twitter. It's obviously like broken in a whole bunch of different ways, but I still use Twitter, despite a lot of its flaws. But yeah, you can see more and more people kind of leaving it, and they can't really switch out because of again, like the difficulty of rebuilding that social graph is immense, right? And so I think it's a good thing, right? Like this has shown people the value of like federated social networks, and so we're going to see kind of more and more kind of users prefer decentralized networks, precisely because of what's happening with Twitter. But bearing in mind that despite everything that's happening, like people still use Twitter, right? Like, and it's the same thing with DeFi. Despite everything that's happened to banks, people still use banks, right? You really have to be focused on building a better product and not just like an in principle better system.
And it's funny that you mentioned that, because just this past week, one of my friends for the first time, and I would never expect this person to talk about, but he sort of mentioned the word social graph. And I think that's one of these signs that first you sort of understand something like a social graph exists and how it impacts you and your sort of experience with using an application. And once you sort of that the awareness sort of develops, that's when the idea about decentralization and ownership sort of comes into the picture. And that's where I think it aligns ideologically with your idea that it's just a continuous grind. When people sort of get aware about these concepts, they'll seek out alternatives that better suit their needs. But yeah, I think that's all from my side. Thanks a lot, Chia, for spending out an hour of your time, and it was really great chatting with you. I think I've personally learned a lot of new things. But yeah, thanks for getting on in this session.
No, thanks so much for having me. Great to be here.